Dear Forex traders, trust you guys benefit from our weekly Forex market analysis, Forex trading education, and Forex trading strategies. And right here, guys, we actually be doing a continuation of our Forex trading strategy for day traders and scalpers. Okay, and what you're actually going to gain here is how to trade with 3 sessions with precision, and then how to just enter the market and get a killer entry from it. So, guys, if you like the idea, don't forget to subscribe to this channel if you're just coming by this channel for the first time, and don't forget to share your thoughts in the comment section as we trade forex with Millionaire Logistics. Okay, guys, so for this strategy, guys, we'll be making use of a smaller time frame like the 15 minutes. Okay, here we are on the 15 minutes chart. All right, now, guys, you may be wondering what these little dotted lines are. Well, if you are, you also need to revert to our previous analysis or the one you find on the homepage on how to trade forex with your mobile phone. Okay, and a trading strategy for it. So we actually incorporated this. They are called period separators. So from this point here to this dotted line represents 1 day of price action, right? 1 day of price movement. And if we actually scale down to another, sorry, I'm using my phone. If we actually, we can also see the same thing. From here to here represents 1 day. So all these candlesticks you see here represent 1 day of price action. Okay. Now, let's see how we're going to maximize this. Okay. All right. Okay, so for this trading strategy, guys, there are two important things we have to know, or let me say 3 important things we have to know. So, guys, if you have your notepad, just write it down or so, right? The first of it is the market flow, right? Where the market is coming from. That's a higher low, right? Yeah, a higher low, and this is also another higher low, right? And also the market is kind of, okay, let me say favorable uptrend. It's still kind of, within this range. All right, but then another important thing we have to know here is the trading sessions, right? And for the trading sessions, guys, like we always say, like we mentioned in our previous content here, right, that we have the Asian section, right, which starts by when? By 12 a.m. in the morning and ends by 9 a.m. in the morning, Nigerian time, okay? And then we also have what? The London session, which starts by 8 a.m. in the morning and ends by when? By about 5 p.m. in the evening, okay? Nigerian time, right? And then we have the New York session that starts by 1 p.m. Nigerian time, about that. And then it runs through till 11:59 p.m., right? So where we have the most of the moves, guys, are between the London session, guys, and the New York session. That's for majors like the pound USD, with the exclusion to pairs like the odd USD, which may also see some volatility during the Asian section. But for this strategy, guys, we'll actually be using just one pair, the pound USD, or you may actually want to test this strategy with the odd USD or the Euro USD. Back to where we are, all right, from the 26th, all right. Now, looking at this day, guys, there are 2 significant things we can find here, right? Now, remember this strategy, guys, is we just want to get some pips off the market from that day, right? 30 pips, 20 pips, 50 pips within, and just get off the market, right? It's not an entry and hold strategy, guys. It's a daily day trading scalping strategy, all right, which we're sharing here. Okay, so for that purpose, guys, we also want to find out, like I said, the trading section again. Then there's one tool that we're going to be employing here, and that's the Fibonacci tool, right? So what we're looking for is a position in the market, a time of the day, and then we also be figuring out where to possibly exit with 20 pips, 30 pips, and that will be all for the day. And we do the same thing the next day within that time period. Okay, now we want to trade this day. Now, looking at it, guys, what would you be expecting? Okay, so from here, you see that this is a new day, and you see that there's a kind of bullish flow in the previous day, all right? And then this is where the new day starts. So from this new day here to about this is actually 10 a.m. Yeah, this is where the London session starts, all right? 10 a.m. here. It's where the London session starts, right? Now, why did I use 10 a.m. here instead of 8 a.m.? Chart here says 10 a.m. guys. It's actually 8 a.m. from Nigeria. It's actually 8 a.m. here. I don't know how it is from other countries, but it's actually 8 a.m. here. And for Nigeria, yeah, the time zone is about GMT plus 1, yeah? Maybe I highlight 10 a.m. on the chart here. Just know that I'll actually be saying 8 a.m. to get the correspondence in real time. Okay, now, so we know that this is where the London session starts, right? So from this point here, we have the Tokyo section, right? So the Tokyo section actually started here and must have ended. Tokyo session will end by 11 a.m. here, which is what? Which is 9 a.m. in real time. All right, 11 a.m. on the chart, 9 a.m. in real time. Okay, now we also want to take advantage or take cognizance of what? The highest point that the price got in the Tokyo section, and then the lowest point, which from this day here, this seems to be the lowest point and this seems to be the highest point of the Tokyo session. All right, now these are the places we want to actually take note of. Okay, now this is what I'll do. We use our Fibonacci retracement tool. Okay, and then knowing that there's a bullish order flow here, as you can see, there's a bullish order flow here, so we actually want to gauge this from here, okay, up to here. All right, now why did I place it this way, guys? Now, why I placed the Fibonacci level from this point to this point is because the previous day was kind of bullish, right? Now we can see from the previous day here, what we noticed was that the price actually rejected off this level and made some very much bullish moves to the upside. And what we noticed, kind of price imbalance here, price ranging within this level and a breakout. So this level is kind of sensitive, right? And we saw price coming back the next day reacting at that level. So guys, what we want to look for is a minor retracement or a major retracement that corresponds with that particular time of the day that could see some price volatility. That's one. Now, another one again is our fib levels. Remember, these numbers here represent significant and sensitive levels in the market, either resistance level or support levels, depending on what we're looking for. And each of these numbers here holds significant importance. All right. Now we have here 100, and we have here our 0 level, which is what? The range, right? Within here. So it means that within this point to this point, we should actually be expecting a reaction at each of these levels. Okay, now the 38.0, which you know here, is one of the levels that I've set. It's a level that I will be watching to. And then the 50.00, which is actually the mid-level, midpoint, and then the 61.8, which is a fair retracement level. Okay, now the 79 is actually a major retracement level, right? That some persons see that level as a very significant one, which in fact that is true. Now we're going to see that. Now, as at the point here, because we actually placed our Fibonacci from the lowest point where of the Asian section, and then the highest point of the Asian section here, the highest price level, which is this. Okay, highest price level around 7 a.m. and the market started making a retracement backwards. And by the time the London trading session started, you can see price around where? Around the 50 fib level, like we have here. Okay, now around this 50 fib level, where was the price? The price was at 50, the 50 level. And just around there, what we see here within 10:45, just within that time frame, see here that the price came to the 61.8 and where started reacting. So within this time frame, is needed to get some scalping opportunities like we see here. Now from this point to this point, we may have made maybe 30 pips or thereabout. But then the strategy is, used for maximum opportunities to trade and all that. It should have been tested for a long time, okay? So that is what we're actually sharing with you guys. But then we trade it at a kind of risky mode, yeah? And that, okay. So from this point to this point, we must have actually made some profit and you get off the market within that period, or maybe hold, right, setting maybe a stop loss of above this level or whichever strategy you want to use for exit. Okay, now at this point to this point, you get an entry that is quite cool. Then still using this same range, you can see somewhere around here that we actually want to look for the opportunity for the New York session. Okay, now the New York session, guys, starts when about 1 p.m. so that's when it starts. So we'll be looking at 3 p.m. Chart time, that's 15:00, which is somewhere around here at a high price. So you can see price actually making its way to the downside, and price actually came down to the 79, and then at the end of the New York session you find this massive move to the upside. Okay, Now we've gotten this. Now we've gotten this. We see price actually breaking this. The price didn't break the daily range, you see. But then at the New York session, you can see that the price is coming from where? The high at this point, and then price comes down to a sensitive level, which could actually be 38, reacting around 38. It's possibility 50, 61.8, or 79.00. As you can see, the price reacted around 79.00 and then made this move to the upside. July, okay. Now for 27, guys, this is what we want to see. Now the price actually on the previous day, right? On the previous day, I have here on the 27th, okay? And so the next day, which will be on the 28th, okay? Now, on the previous day, what we saw that the price actually, the way it ended, yeah, price actually made some very impulsive moves. Definitely these moves were made by institutional traders, right? Very bullish move to the upside. So what we want to see after this kind of move, guys, we don't expect the price to just start chasing the cloud, okay? We want to see a kind of retracement, right? Now, because first of all, the price must have created certain price gaps. You see all these areas. But then it's not necessary that price must actually fill this gap to the end, but it serves as a reference, okay? Now, looking at this here, we still have that daily range which we're still going to look, right? Now, ignoring all this. First, we can, or we can actually see the range to see how the price will actually come to fill here. By what? By just taking the lower, by just taking where it began, which is the lowest point, and then we can actually place a 0 at the end of that move, okay, and see how price reacted to it to that day. Now what we have here is price coming down to the 50 level, which is quite cool, and then making a move further to the upside. But that's for another content, okay? Let's just focus on the daily moves. All right, now the price actually opened here, right, and then we want to look for our high. All right, and then the Asian high will be somewhere around okay, 10 here, 8 a.m. So we have the Asian high to be here, right? This is the highest point that the price must have put in the Asian section, right? Somewhere before it started, okay? Now, this is where the Asian section must have ended, okay? So we have this here to be the highest point, all right? And we have here to be the lowest point, okay? Now we take our fib level and let's see what happens. Okay, now this is the high, this is the lowest point, right? And this is the highest point, okay? This is the highest point, all right? And this is where, this is the lowest point, okay? Now, at this point here, you can see that before the London session opened, right? This is the London session here, right? At this point. So we must not have seen what happened here in this price. So when the London session started by 8, this should have been the highest point. Make sure I'm placing it well. Okay, this should have been the highest point by then. Right, this should have been the highest point, and then this is where our London session starts. So what we then saw was what price coming down within that London session. You see price coming down, rejecting where? Rejecting 61.8, and we must have had little opportunity here to take a trade. However, this was actually the high of the day. So most of the volumes, guys, you can see most of the volumes here happen by 10 a.m., which this whole time becomes the time we actually start chasing the market, or start, you know, looking for possible entries to enter the market. And then where do we find one, guys? A scalping opportunity. We find one somewhere around here. Definitely, if you may have entered here, you must have set a profit target, maybe a TP1, right, somewhere around here, right, and maybe a TP2 above here. But then may have gotten in some short profits. However, this was the main move, and what this move did was very simple. See, it actually came down here and it broke this low. It broke the daily low right here. So when price breaks the daily low, guys, it actually tells that the price will actually be making for what? A short what? Reversal. So when price makes this kind of low, our instinct will be to look for a sell opportunity at the next retracement, okay? Now, which is quite fair, guys. disregarding this price imbalance that needs to be filled, right? Now, if we take our fib level again and we draw this time around from the highest point, that's the origin of this downtrend, right, to the end of it, when we start seeing a rejection to the upside, what do we see? Now we see price actually coming to tap into rejecting the 61.8 and somewhere around the 70.5 level, 70 level here around here. But you can see this rejection, and then what? This could actually be an entry after this candle, or maybe if you scale down to 5 minutes time frame, you can actually see some shorter entries, but this could actually serve for what, a 15 minutes scalping opportunity down to this level, maybe TP1, TP2, which definitely wouldn't have been met. But then that's because we disregarded this price gap here that needs to be filled. Remember guys, when we draw a retracement level from here, we caught this move here at the 50 fib level, which is okay. If you see some multiple rejections around there, which is safe to actually take. Now this is for day trading, okay? Now let's see what happens on the next day here. All right. Now on the next day, guys, on the next day, which is the 29th, okay, 29th here. All right, now what do we see from the previous day, right? Now from here, all we saw was price actually making a range around here. So I don't know, want to see some moves, some other moves on the 29th here. Very interesting one. We can see that the start of the day was kind of in a little range, and then we found a breakout here to the upside, and this is what the price did. Now the sensitive time here by 8, okay, by 8, this is the highest point. This is where action starts. And so if we're to draw the highest point that the price actually met to the lowest point with our fib level, which we're going to do, right, you can see that, okay, fine. You can see that this is the lowest point price ranging, and okay, this is it right here. This is it right here. And what can we tell, guys? Okay, now we've seen that this price is actually showing a bearish move. And this bearish move is kind of institutional based, though. You can see a big bearish engulfing candle, seeing that this price and movement to the upside, impulsive movement to the upside, and a collapse in price, 15 minutes full bearish candle, right? And right here at this point where it's just the beginning of the London session, guys, you can see this movement from here will give us a confirmation that, yeah, we can actually take profit somewhere around the 50 level, 61 level, or 79.0 level, fib levels, okay? Now at the point where the price actually came down to break this low, the same strategy that would have failed here, and somewhere when we took around here, you see here that this break, that what happened here was very significant, okay, because the price actually came down, breaking this daily low, right? So at this point right here, we should be expecting that, hey, the price should be going for a minor price reversal, okay? So from this point, guys, you can draw a fib level from the highest point of what we suspect to be a continuation in trend, the highest point of what, the origin of the downtrend, which should be here, okay? And remember, guys, we're waiting for the opening of that new section to where this is it. And guys, we're looking for what, 15, right? 15, this is where, so by the time we come into the market by, let me say 12:30, we're seeing all this. This is 12:15, right? And this is 12:30, right, if I'm not mistaken, right? And this is 1 p.m. By the time we see this kind of move, we're saying, oh, this structure has just been broken. The daily low have been taken out. So what we see here is price reacting around the 38.00. So seeing this price action pattern here, which is more like a railway pattern here, right? These two candlesticks, we can maybe after this wait for this, and this could actually be a confirmation, guy. Hey, TP1 could be here, TP2 could be here, right? And TP3 coming to 0.63, but you can at least have two TP levels here. And within that time frame of the New York opening section, we've gotten what? we must have gotten maybe 30 or 20 pips out of the market. So that's what this strategy is based on, guys. Okay, so if you've been following up to this time, guys, appreciate you guys, and don't forget, guys, if you love this idea and you actually want to see more of this content, encourage and support the channel by subscribing to the channel and turn on the notification bell so you get notified each and every time we drop and we share our strategies like this, our day trading strategies, our weekly forex market analysis, which of course will be coming soon, guys.